about credit score and credit report. How do you maintain your credit score and build a good credit score? So there are a couple of factors that you need to keep in mind when you happen to apply for a credit card application, or if you happen to apply for a mortgage or for a loan. If you're a first-time user, what will happen is your credit history will be created, and that the same will be shared with other credit reporting agencies. And as days go on, and you happen to purchase anything with your credit card, or if you happen to apply for a loan or a mortgage, that same thing is recorded in your credit report, and that credit report is shared with all the lenders. If you happen to apply for anything based on your credit card application, based on your mortgage application or your loan application. So it all depends on how you maintain your credit score, and have a good credit score all throughout. So there are a number of factors that depend um, that are dependent for the credit score. Number one is you have to ensure that you make your payments on time, or else you'll have a negative credit score. So what is important is, I will just share something with you. So this is how it is. At the end of the month, you will get something known as a balance and a minimum payment and a payment due date. So you have to ensure that you make the entire balance amount before the due date. If you make a payment before the due date, then in that case you will you'll have a good credit score all throughout. But if you happen to pass the due date, and if you're not able to make a payment of this amount, then in that case you may not have a good credit score. Although if you want to make a minimum payment, you still can make a minimum payment, but in that case your credit score will not be as you expect it to be. So in order to have a good credit score, you have to make sure that you have to make a payment of the entire amount that is due before the due date. Apart from this, I can even share something like this with you. See, the thing is, why the reason it is fluctuating. The reason why it is fluctuating over here in this graph is the outstanding amount that is due at the end of the month determines your credit score. So if you have an outstanding amount, then it will result in a decline of your credit score, and the same will be reflected in your report. So if you happen to have less balance at the end of the month, then in that case it will rise. So you have to ensure that you make a payment at the end of the month, and the due amount is nil, almost zero at the end of the month, and before the due date you happen to pay the entire amount. If anything is outstanding, or if anything is carried over to the next month, in that case there will not only be interest charged on that particular amount, your credit score will also fluctuate. And if you're not able to make the entire payment within a specified period of time, then in that case that will result in a negative credit score. And apart from that, there are two reporting agencies as of now in Canada, that is Equifax, and the other one is TransUnion. And the credit report can be seen by banks, credit unions, financial institutions, employers, insurance companies, mobile phone companies, and the decisions could lead to lending you money, collecting a debt, considering you for a job, providing you with an insurance, and many other things. So it can seem like you are urgently seeking credit or trying to live beyond your means, So that is the reason a credit check is carried out, in order to find out what is your details. And your credit report may contain your name, date of birth, your addresses, your social insurance number, as of if you happen to be there in Canada, your passport number, your driving license number. So all these details are captured in a credit report. So that's how it is. So it is important that you have a good credit score in order to get a good job, or maybe apply for a mobile phone connection, or if you happen to apply for a loan application or a credit application. In all the cases, you need to have a good credit score, and the outstanding that can be maintained with the help of paying whatever is the outstanding amount. You have to make a payment before the due date. If you make a payment before the due date, then in that case your credit score will be positive and you will build a good credit score. The simple and easiest method in order to build a credit score is you will have to apply for a credit card, mortgage, or a credit line. In case if you happen to apply for a credit card, then you have to ensure that you make your payments on time, and you don't miss out on any of the payments. If you miss out on any of the payments, then that will be a negative credit score. So you have to ensure that whenever you apply for a credit card, you maintain your credit history as per that. So we will just go and show you how you can go ahead and improve your credit score or maintain your credit score. You go into money and finances, debts and borrowing. Then you have the option known as credit reports and scores. So here you can have the option known as improving your credit score. Improving your credit scores always makes you make your payments on time. Make at least minimum payment if you can't pay the full amount that you owe. Contact the lender right away if you think you'll have trouble paying a bill. Don't skip a payment even if a bill is in dispute. Then apart from that, increase the length of your credit history. The longer you have a credit account open and in use, it is better for you for your score. Your credit score may be lower if you have credit accounts that are relatively new. So apart from that, you can even have different types of credit, such as car loan or a line of credit as well. But in either case, you have to ensure that you make your payments on time, and you don't miss out on any of the payments. If you happen to miss out on any of the payments, you may end up having a negative credit score. And the same information, you can find it on the Government of Canada website, wherein you can find all the information related to your credit history, your credit account, how do you maintain your credit score, ways or methods in order to improve your credit score. And also you have the option how long the information stays on your credit report. Ideally, it is stated that it stays for a period of 6 years. It stays for a period of 6 years. However, some information may remain for a shorter or a longer period of time. If you happen to miss many payments, if that account was sent to a collection agency, or if you had previous bankruptcies. So in all these cases, it ends up having a negative credit score. Credit report is basically it determines your credit history, and it helps a lender to identify if you have borrowed any amount and if there is an outstanding amount. And depending on the credit report, a lender can approve your loan application or a credit card application. So it all depends. It all starts off when you happen to apply for a credit card or for a loan or for a mortgage, and depending on your credit history, your loan or credit card or a mortgage is approved. Now it depends. If you are applying for the first time, your credit report is created when you borrow or apply for a credit card for the first time, and lenders send the information about your accounts to the credit bureaus, or also known as the credit reporting agencies. Now, your credit score is determined if you use your credit responsibly, and you will lose points if you have trouble managing your credit. Your credit score will change over time as your credit is updated. Now, important things to note about this is how do you maintain your credit score? The most easy thing is you have to ensure that you make a minimum payment, or you have to pay up whatever is the outstanding amount at the end of the month. And if you happen to miss out on any of the payments, then you will have a negative credit score. So it is important that you make your payments on time and you do not miss out on any of the payments. In case if you miss out on any of the payments, you will have a negative credit score. Now I will just show you some of the aspects of credit history. Now TransUnion is one of the credit reporting agencies that happens to work on credit reports. What happens over here is if you happen to if you see this curve over here, it's been fluctuating up and down and up and down. The reason for this is if the person has some outstanding balance at the end of the month, and if that outstanding balance increases month over month, then in that case your credit score will also reflect in your credit history. So it is important to note that you happen to maintain your balance. Like if you see over here, there's a new balance of 302.45. Although the minimum payment required is only $10, you should ensure that you make a payment by the due date. You should make the entire payment by the due date, or else that will you'll end up having a negative credit score. So it is important to note that you make the payments on time and you do not miss out on any of the payments. So apart from that, who creates your credit report and credit score? It's TransUnion and Equifax, and the agencies that you can see and use your credit report is basically banks, credit unions, and financial institutions. And it can be even credit card companies, mobile phone companies. The decisions could lead to lend you money, could collect a debt, or consider you for a job or something like that. So over all these things, the credit score and the credit report is important. Also, one more thing is if you have any non-sufficient fund payments or bad checks, that will be reflected in the credit report. And it will show you whether you have made your payments on time, if you miss any payments. So all these things are captured in the credit report. So it is important to note that you should make your credit payments on time before the due date. So if there's a new balance of says $300, you have to ensure that you make a payment due date by before this date in order to avoid the negative credit score.